During our live office hour calls with our community of niche physical commodity traders, we had a very interesting conversation. So one of the guys was trying to close a deal for 3,000 metric ton of product, and we were all trying to help him. And basically Nick, that you may know, he said like, hey guys, what are you doing here, man? It makes no sense. This quantity, this product is for big firm. The margin is just too low for us. It doesn't make sense. You should focus and spend more time on more niche commodity. And you know what he said really stuck with me, because I think he's right. So this is what I wanted to discuss in this video. It's about market selection, which market, which commodity you should try to jump in if you are at the beginning of your career and you want to break into commodity trading as an employee, which commodity you should aim for. And on the second part of the video, I'm going to discuss if you want to be your own boss, if you want to put yourself trade flow together, like the little group that we have in our community, which market you should focus on, which makes sense, which one doesn't make sense. So yeah, I think it's really quite valuable for all of you guys. And if you are new to this channel, my name is Damien and I've been involved in physical commodity trading for more than 15 years. So if you want to know more about this crazy industry, just subscribe to the channel. Alright, so but before I jump in the first part of the video, I have a lunch in 2 minutes. And so basically I'm already late for the lunch. Alright guys, so let's start with the easiest one. Which commodity you should choose, which market you should choose when you want to break into the world of commodity trading as an employee. So it's quite an easy question to answer actually. You need to take the first job that offers you an opportunity. That's it. Whether this is in coffee, in rice, in crude oil, in jet fuel, in whatever. Take the first job that you got offered, because maybe it's going to be the last offer, right? The difficulty is to break in. The difficulty is to get your first job. Once you are in, it's easy to move from one company to another as a junior, you know, because as a junior, the value is not in your network, all right, or in your reputation. So it's quite easy to jump from one commodity to another as a junior person. Like if you are a junior operator and you have 1 year doing, I don't know, containers of whatever product, it's going to be easy to jump as an operator role in another company doing break bulk. Because obviously the company knows that they need to train you on break bulks, but they also understand that you kind of already know the job. So it's way easier to jump from one company to another as a junior. This is not the same when you are like a senior. Let's say that you are a senior trader in coffee. Then you are kind of stuck in the coffee business because your value is your network, your knowledge, reputation in the coffee business. So it's quite unlikely that they will offer you a job as a biofuel trader, all right, if you were like a senior coffee trader. So the idea is like the more experience you get in one commodity, the harder it's going to be to switch from one commodity to another. That's basically the generality. But as a junior, very easy. So take the first job that is offered to you and then move to another company. Let's say that you want to optimize for money. This is the only thing that you want is the most amount of money. In that case, you need to try to get a job on the desk of the big commodities at the big trading firms. You need to try to get a job at the biggest trading firm and also on the desk that move the most volume. Because this is basically their business model, making little margin with huge volume. So if you are on a desk that moves a lot of volume, so you'll be able to capture in your pocket a piece of this volume that is moved. So that's roughly the best idea if you want to optimize for money. That being said, I know some guys that makes millions trading coffee, trading sugar, trading metals. So even though the volume is less obviously than crude oil, iron ore, or even coal, it doesn't mean that you can't make a lot of money, all right? But it gives an idea of where you want to be if you want to optimize for money. Then the other thing is like if you want to optimize for adventures, like I don't know, you see yourself a modern Indiana Jones. There's another guy that Indiana Jones, maybe it's a bit too for old people like me. Let's ask ChatGPT. Alright, so who could be a more modern version of Indiana Jones? Alright, so ChatGPT answer is like Lara Croft. Yeah, I'm not really sure about that. Nathan Drake, who is that guy? No idea. Alex Rider? No idea. Anyway, so if you want something with more adventures, try to go to niche market or actually market that requires you to work with extremely difficult countries. So, and then you will have your fair share of adventures, which is not going to be the case if you are on a big volume desk, because big volume desk is going to be more like a corporate job, a normal corporate job, you know. Even though you will still have the thrill of market moving, it's going to be less of counterparty risk and so on, because actually it's not really wise to take a massive counterparty risk with that amount of money. But yeah, so hope it's clarify if you're a student or if you are like young employee and you want to jump into commodity trading, this is what you need to aim for. If you want to break in, what is the best commodity, the best market is, first of all, get whatever job you can, and then try to move. And depending on what you want to optimize, is it for adventures? Is it for purely money? Try to hint in that direction. But again, life is full of surprise, so that's only general rules. Oh, I know a guy. The guy is a trader. He made multi-millions dollars. He made more money than the CEO, than the shareholders, and so on, working for this company here, right? He's a lumber trader. Man. I think he's one of the most successful lumber trader in the world. And basically, I asked him, man, why don't you want to be like a partner in the company? I think he has some share of the company right now, but I mean, being a trader is quite tiring, so you can fold now. Why don't you want to take executive position or something like this? He said, man, they've been offering me like better other position for 20 years, but I don't want. I just want to be a trader. I don't want to have the headaches of speaking with the banks. I don't want to have the headaches of managing a team. I don't want to have the headaches of being a corporate guy, speaking with the board, like, sucking to the board and like this. I don't want to do that. I just want to trade. All the guys that I trade with now, they are all my friends. I love doing it. And this is what I want to do. And the guy is making more money than all the other guys in the company. Even with lumber, you can be wealthy. So, but yeah, the general rules, if you want to make more money, go where there's more volume traded. All right, so now I have something else to do. I'll revert with which market you should decide, which commodity you should go for. If your idea is not to be an employee, but it's to be an entrepreneur, or to put your first trade flow together. Alright guys, so now if you want to put trade flow together, so which market, which commodity, which ingredients, which raw materials makes the most sense for you to deep dive in? Because there is one thing that we don't have an infinite of, and this is time. So your time should be your most valuable asset. So how to make the best use of your time? So if you are a complete beginner, you have never closed a deal, alright? Never done a deal in your life, you've never made money by moving stuff around in the world, it's quite easy to know the first market that you should do a deep dive in. It's the market of your anchor buyer. So anchor buyer is a term that I use for the buyer that is going to trust you to give a shot to deliver what he needs. So basically it goes like that. When you try to get in, it's too difficult to think like, oh, I think lithium is hot right now, so let me do a deep dive on a lithium, try to find a buyer, try to find a seller, and put them together. This approach doesn't work when you start. Obviously, when you are a bit more experienced and you have like more track record and you know how it works, you could do that. Even it's not the best, but you could do that. But when you start, you need to start with the product that the first guy that is going to give you a shot needs. I have a complete video about that, which is a 0 to 1 video. I will let a link if you want to watch it after this one. So you will try to find someone that needs raw materials, ingredients, commodities, whatever they need. Take anything. If they need like plastic, wood, textile, whatever they need. So you don't care about that. What you need to find is an anchor buyer, someone that is going to give you a shot, all right, for your first deal. And basically what you need to say is some stuff like that. Hey man, I'm just starting my import-export business or commodity trading business, however you wanted to call it, and just give me a shot. Let me know what is the price of your other supplier and the payment terms, and I will match them. All right, just give me a shot for a trial container, trial shipment, whatever. And honestly, if you speak to the right guys, he would give you a shot. We do a trial. This is what I currently pay from my other supplier. This is what I have as payment term. We'll do a trial together. I'll give you a shot. With that basically angle, we have a lot of students that just made their first trial. But again, you can't do that if you have in your mind, okay, I will try to trade tin, I will try to trade plastic, I will try to trade scrap, whatever, right? It doesn't work like that. You need to find a buyer. Whatever he needs, you'll find it for him, okay? So again, I discussed in length about how to close your first deal in the 0 to 1 video. You will be able to watch it right after this one. So now, let's say that you are a bit more experienced. You've closed a few trial containers with different buyers, and you have a track record. You know what is required to ship product around the world. Here, what I want you to understand is like, if your goal is to have your own company, you can't compete on the same trade flow as the big guys. It doesn't make sense at all. You need to find niche trade flow with few competition or maybe even no competition, and you need to own those trade flow, or you need to own those niche market. The sad part is like the best niche market is like I can't tell you about, because it's some friends, some students that are trading on them, and I don't want to ask them, but they are like dozens and dozens and dozens of niche market that have quite good margin that you can just jump in, but you need to find them, right? And usually the way that you find those markets is like you need to Oh, right, I have a, oh, I don't know if you see, I have a lunch in 9 minutes, I need to go. But I'll finish it right after my lunch. Alright guys, so now that we have finished with all the debutant stuff, with all the beginner stuff, let's go into the meat of the video, which is how to select a market, a commodity market that makes sense for SMEs, small and medium enterprise. Alright, so the first tell that there is a good market for a SME, a niche commodity trading firm, is when you see. So the first tell that there is maybe a market for you is when you see regulatory change. You all know politicians, you know those guys that leash life and money out of their own citizens by lying to them. So they love making new laws. Sometimes when there's new law, new regulation, it built a market. And those markets are usually quite interesting for small firms to jump in right from the get-go. So let me give you like a couple of examples. So with my company, Grumbar Energy. So with Grumbar, we try to put a trade flow together, some trade flow together in the waste market, the garbage market. Basically, guys, if you don't know, the garbage, yeah, the garbage, I will put some pictures for you to see what I'm talking about. Those garbage are shredded and then they are used as fuel in cement factory, in any other factory. So we try to jump in this market, but we were already a little bit too late inside this market because the big traders were starting to come in as well. So we were already kind of fighting with the big guys. Mercuria, for instance, was buying like a small asset in this space. There were already bigger player that was trying to get on it. So we were a little bit too late in this market, so it did not really work. And then at Grumbar Energy, so if you don't know, Grumbar Energy is like a Romanian company that I co-own with an associate, and we mostly distribute fuel. But my associate Paul saw like a big opportunity in the power market. So basically Romania changed their regulation on the power market, so it completely opened new opportunities for solar panel, wind energy and stuff like that, battery pack, like anything around the power market is completely shifting right now in Romania because of this new regulation. So Paul saw this and then he jumped in, and basically now what he does is he put project together for solar panels project or any type of asset that generates power. Basically he put the project together and then we resell it to private equity or even other traders that want to jump in the market and use those assets to trade the electricity. So a change of regulation really opened up something for us. Obviously this projecting is maybe going to work for 2-3 years, then all the projects are going to be seized and then it's going to be over. But in the meantime, we can make money out of it because we saw the opportunity and we were nimble enough to seize it. If you would have done that in a bigger firm, some people will have to tell their boss, oh, I think there's an opportunity here. The boss would have needed, I don't know, some type of market research or whatever, and then 1 year down the line they would have moved their ass, and we've already closed and took exclusivity of, I think this morning Paul told me that he has exclusivity on over like 70 projects, so not too bad. Anyway, so that's for the example from the Grumbar. But now there's also a really niche market, regulatory market that it are completely unaware of, and some people are making huge money with them. So there is something called HFC. So there is something called HFC, and HFC are basically the gas inside your fridge, inside your cooler, inside your what how does it called, like frigo? I don't know. Inside your fridge, there is a gas, and this gas is basically harmful. Most of the European countries, there is like a paper market that gives you the right to use this gas. So I know few firms that jump in it, even though there is not a lot of liquidity. But if you know who needs to purchase them and who is okay to buy them, there is a market for you as a trader. So be mindful of all this regulatory change, because for SMEs, it could really make you jump on big golden opportunities. The only thing with regulatory change is like if the market is big enough down the line, what has happened with the garbage stuff, big players will come in and then like take maybe whatever you've built away. But in the meantime, you can still make a lot of money. And also some of those markets makes no sense. For instance, this market, all the allowance market, carbon market and stuff like that, I'm not really sure that they will still be there in 10 years, because most of those markets are in Europe, and Europeans, for instance, are getting extremely poor. Like every year they get poorer. So I'm not really sure that in 10 years they will be happy to still pay 15% more for some carbon taxes and so on. So all those regulatory market that doesn't really make sense down the line for the well-being of the citizen might disappear. So anyway, but it's still a good opportunities for small and medium firms. Now let's see something that you don't want to jump in. So if you see this market structure for a small and medium firm, it doesn't really make sense to. So something that you need to run away from if you are a niche commodity trader is trade flows between high capex. So what does it mean? So if there is like a trade possible between two entities that are high capex entities, so it means that there is entities that has made a huge investment to build this asset. For instance, let's take as example alumina or bauxite. Okay, bauxite is used to produce aluminum. Okay, in order to produce aluminum, it's only huge factory that can produce aluminum because it requires a lot of energies. All right, so it's like multi-million-dollar capex to produce aluminum. All right, so the factory is a big factory. On the mine side, so usually again the bauxite mine are huge as this is a low-cost commodity. It doesn't really make sense to start a new mine if it's not a huge mine. So again, $100 million are used to start a bauxite mine. So you as a small trader, it doesn't make sense to try to build a trade flow between two huge entities. All right, multi-million-dollar refineries that produce aluminum, multi-million-dollar mines. And then what are you going to do? What do you expect to do between those two guys, like buying from that mine and selling to that guy? It doesn't work. So when there is like a trade flow where high capex on both sides, just forget it. Those type of trade flow are for big commodity trading firms that can basically finance the good for no cost. Otherwise, they would do themselves, you know. So yeah, just have that in mind. I would say the only caveat to this rule is like if you trade something like some niche product, like some ingredient that the producer, high capex producer, doesn't really care because this is a byproduct from them. It's low volume. They don't care. They just like give it to you. Okay, find a buyer. And then the buyer is another high capex company that again doesn't really care about this ingredient, but still need for whatever production they have. Maybe here, if you do a niche product that between those two high capex entity, why not? But that will be the only caveat. Now another red flag. Other red flag in red. Future market. So if you want to trade a product which has a future market, a highly liquid future market, just don't. If there is a future market, it's probably means that there is a lot of people with a lot of money and a lot of brains that are already trading those markets. It doesn't make sense for you to come in those markets, especially if you think that you can do some type of, especially if you believe that you can put together some type of FOB CIF deal or FOB CIF CIF or whatever, some type of deal like that in those type of market. Just forget it, man. There's already a big player which is doing it. It doesn't make sense. So don't waste your time in trying to put like some type of deal like this. I can tell you there's already some guys that are doing it and that are doing way better than you at a lower cost of financing than you. So don't waste your time in those markets. I would say that the only, if there's a future market, which is a local market, for instance, milk in the US is a local market. So if you can trade milk future in the US, all right, it's a local market. So if you want to trade milk in, I don't know, Australia, Poland, obviously it won't impact. But yeah, or if there is future market with no liquidity because nobody is using it, then it's okay. But in a highly liquid future market, just don't waste your time in. Especially if you hope to do some type of FOB CIF deal, then you won't make it. Oh, and if you don't know what FOB CIF deals means, maybe check the first link below this video and you will land on the Shipping Commodity Academy. And this is basically where we help people break into the commodity trading industry. And FOB CIF is really like a very simple terms that you need to know. Anyway, so let's carry on. If you still want to be involved in markets that are futures, there's only one way. So you need to go where it's too difficult or too small for the big firm to be involved. So for instance, let's say that you want to trade copper. Copper is hot, electrification, copper will go to a all-time high. So copper is going to remain a very hot product for a long time, I guess. So for instance, the only way to trade copper, to my point of view, as a small or as a niche commodity trading firm, would be that way. All right, so you rent our house in a very difficult countries. Then what you do is you are going to aggregate copper ore or copper concentrate from very small mine, artisanal mines that the big player doesn't want to touch because it's too small, it's too dangerous to deal with them and so on. So what you are going to do is you are going to aggregate lower quantity, ding, 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 of copper ore or copper concentrate. You put it in your warehouse, and then when it's safe in your warehouse, a big international buyer can just come, check the quality, and pay. So here, if you are able to do that, which is very difficult, honestly, working with those small artisanal miners is very difficult. There is at least like 10 to 15% margin that you can pocket if you do it in a very difficult countries. That's one way to do it. So basically, you do something very difficult, which is aggregating the origination and packaging it in a way that is safe for a bigger player to purchase. So that will be a way to be involved in those huge big markets. Then the same idea. So this idea is aggregation of origin. The other idea would be distribution at destination. So here, this is the same idea, but on the other side. And I will take an example that I know very well, which is milk powder. So let's say that you import 4 containers of milk powder. Depending on the price and which type of milk powder you want, it's going to cost 1 million US dollar or euro, whatever. You import this in a country of destination. Then when this is in the warehouse, then when it is in the warehouse, you resell it to multiples of smaller buyer. Again, here you can expect 10+% margin if you can make this happen, which is not an easy task. Because, for instance, most of my clients, when I was a dairy trader, was importers, and they would all have this business model, which is a very simple business model. You buy stuff, put it in a warehouse, and then resell it to smaller client. And the margin was like definitely more than 10% for them. So again, people don't want to do it, big firms don't want to do it because this is quite difficult to make it happen. You need to sell to a bunch of different smaller buyers. You need sometimes to give them credit. Sometimes they are not the best buyer in the world. They try to steal from you. So here, this is a model which is again very difficult. Small firm doesn't want to do that, especially if the market is not big enough for them to put a full team on the ground to do it on their behalf. And then they would prefer to find someone like you, sell the stuff to you, even finance you for you to be able to resell it and then pocket the money. All right, so when you are looking to a new commodity market to jump in, have those things in mind. Like, try to find a niche trade flow where big players can't be there and they cannot compete you away with a lower cost of financing. And most of the reason that big players doesn't want to be there is because it's too difficult, there is maybe too much risk in terms of reputation, or it's just too small for them. Because you can imagine for those guys that do billions and billions in revenue, if you add, I don't know, 10 million in revenue, they don't care. They don't care at all. They can't even pay someone to be able to support a business that will do 10 million in revenue. But for you, as a small business owner, if you can start with 10 million, and then let's say that you do, I don't know, like 5% margin, it's still 500K in your pocket. So it's quite interesting. So try to hunt for those opportunities. And yeah, do something difficult, aggregation or distribution, or regulatory change. When there's something new in a country, there's often a market that is opening for smaller player and more nimble player that can swoop in. All right, guys, so I hope that you like this video and that you learned something. And if you want to break into the world of commodity trading, check the first link below this video and you will end up on the Shipping and Commodity Academy. We've been helping students for more than 5 years breaking into this industry. All right, so see you next week. Ciao.